I think I have to ask the question that's on everybody's mind. Is that background behind you, is that like a pull down sheet that comes behind you, or is it?
I've been in the room, so I can verify that it
So
does
it's
actually
a real
exist,
room.
and it's
Okay.
a real room.
I feel like our next interview, Mike, you need to wear a monogrammed house coat and like smoke a pipe while we do it.
You know, when we did the house, my wife, she liked the library look in one of the rooms, but I only insisted if I could get a couple of chairs where, you know, Tim and I could have a scotch in there and stuff like that. So
It's good. I think it's the best backdrop of any interview we've done yet. So very much appreciate it. All right, ladies and gentlemen, we are here for yet another episode of the Resource Insider Podcast, Quarantined Edition. I am still quarantined, I guess, up in Whistler at the moment. I've got 2 days left on my sentence. After that, I might go out and roll in the grass or do something like that. I don't think I've seen the sun in a while, so that's going to be nice. In today's interview, we're going to be talking to two gentlemen that I've been talking to many, many times over the last couple of years. We've collaborated on things with them. They're great dudes who have extremely interesting opinions and valuable opinions on the uranium space. And that is none other than Mike Alkin and his analyst, Tim Chilleri. And today we're going to talk about how coronavirus and all this crazy shit that's going on in the world is actually impacting the uranium and the nuclear sectors. This is something I haven't seen a lot about. There's a lot of you out there that are definitely going to be thinking about this. So we're going to get into the weeds a little bit on that. And without further ado, Mike, Tim, thanks for sitting down with me today.
No, you're welcome. Yeah. Thanks, Jamie.
Absolutely.
So, Mike, I almost think I need to have you lead this conversation and just tell me what it is I exactly need to know. You're really the uranium guru in this space. But let's start by talking about how you guys are handling this crisis, what you're doing, and what you're spending your day on.
Yeah, that's a good question, Jamie. We're spending our day looking at opportunities, financing opportunities, looking and spending our time doing the macro uranium and looking at companies. Nothing has, from a fundamental supply-demand standpoint, over a period of time, and as you know, as a mining guy, when you need a mine, you don't just snap your finger and it's there. So, you know, this dreaded virus that is enveloping the world, hopefully sooner rather than later, and Lord knows I know nothing about that, but hopefully sooner rather than later, it starts to fade, and we see the numbers, and the world gets back to normal. And at the end of the day, from Tim and I's perspective, you still have a supply-demand situation that's going to require a significant amount of new supply coming online over the next number of years. And you know, our view is we believe that horse has already left the barn. And when you look at the market caps of the developers who can come in, they've been decimated, many of them, and that just makes the chances of those mines becoming projects sooner rather than later from a financing perspective more difficult, which means that there's going to be more of a shortage, which we think leads to a higher price. So from our standpoint, the day-to-day, nothing's really changed. From a demand standpoint, the aggregate demand around the world is quite diversified in 31 countries. Will you see a hiccup in demand? Probably a little bit. It'd be naive to say probably not, but does that affect purchasing patterns over the long term and the contracting cycle? We don't think so. We think it actually, Jamie, heightens the awareness of where utilities are, and that the risk has gone from the suppliers, the producers, is now being more borne by the utilities because they have been staying out of the market longer than we think they should, and we think they know they should. And aggregate supply is highly, highly concentrated. We just saw Cameco take down Cigar Lake for 4 weeks. We personally think 4 weeks is what's going to happen in 4 weeks. Is COVID going to go away? Probably not. You know, and some have wanted to see Cameco bring Cigar Lake down anyway. Other mines around the world, if you're in Shymkent, Kazakhstan, where most of the JVs are, a large city where some of those miners go back and forth, there's risk there. Same thing with Olympic Dam, working elongated shifts. So we think you're going to see that the awareness of a very highly concentrated supply base transfer more utilities right. Tim and I believe inventory levels are below desired levels, at or below desired levels, depending on the utility.
So, it's almost surprising to me that Cameco shut down Cigar Lake, given the relatively remote location it is in. You'd think they would be able to put the measures in place to sort of protect that supply chain. Do you think perhaps COVID is an excuse for that, to shut that down and say, look, it's at these prices, it's not making a lot of sense to mine. Maybe we use this as an opportunity to sort of let the world know that they're going to need more uranium pretty soon?
Yeah, it certainly could be. Look, if you think about the leverage that Cameco and Kazakhstan have over the market, from just the sheer size of how much they produce, and if you were listening to Galam Permatov, the CEO of Kazatomprom, at the BMO conference just recently, where they said it's all about supply discipline. They have no interest in taking market share. And if I'm Cameco, and you see, investors focus on the spot market. So if I'm Cameco and I've signed 36 million pounds in the prior year in 2019, yet the price reporters are reporting the best offer on those off-market discussions, not the actual prices where those contracts were signed, I might be a little frustrated. And investors tend to focus on spot market in uranium, which is really just a surplus disposal market for a handful of pounds, because most of it is trader churn. So, but investors focus on that. And so if I'm Cameco, if Tim's Cameco, why not take Cigar Lake down? Because at the end of the day, the uncovered requirements, we believe, from doing our own analysis of the market, is significantly greater what the market might think. And we think utilities know that. So we think that they can move prices.
Sure.
So,
and maybe one other thing just to add to that, Jamie, is, the mines are one thing, and I think a lot of people are looking at the first order consequences of the mines and the available supply and how the situation is evolving. I think it's also important to understand that the fuel cycle, the entire fuel cycle, conversion has left. There's one facility left in the Western world that's open up in Canada outside Toronto, which is significantly more populated and less remote than Cigar Lake up in northern Saskatchewan. You have fuel bundle facilities around the world that are not in particularly remote locations as well. So the utilities are looking all along the fuel cycle, ensuring that fuel assemblies are being completed and can be delivered. Even the transportation themselves, can these things be moved around the world right now as needed? So they're looking at the full picture, whereas investors sure are looking at the mines, but there are other areas and second order effects as well too.
And Jamie, from our perspective, this is all cosmetics on the outside, because the market's healing underneath, where Cameco is adding those pounds. They're getting the price they want. Investors like to stare at a spot price, and that is what it is. So if Cameco does keep Cigar Lake off longer, you still have to have some pounds come in. And don't for a second kid yourself. Some of these traders are net short uranium. And some of those guys are because it's been easy, it's been to do that for a while. Now, the price of physical uranium is up 45% from the bottom. Even since 232, it's up a little bit, but it hasn't just jumped, right? And I say the physical spot price, because that's what everyone focuses on, because of the nuances and the opaqueness of this industry. And so, Cameco has to balance their customers, the utilities, versus their investors, the equity and debt investors. So equity and debt investors, because there's only really one thing they look at, because most people aren't spending their time in the fuel cycle, is that spot price, which we think is not a great indicator. But if those mines come offline, you will need to see more buying. So it's more optics for seeing the spot price move than what's really taking place in the term contracting side of the market.
So, Mike, you just mentioned that the actual the price of physical uranium, the spot price, is holding up well. Tim, before we got on the call or before we started recording, you and I were discussing this, and I was saying, equities in uranium, like pretty much everything else, have been hammered, but that the actual physical uranium is holding up well. What do you guys see this as? You manage a uranium-focused fund. Is this a buying opportunity? And if there are people out there who are either already in the uranium space or new to it, and they're thinking maybe now's the time to enter, is it? Or is it a wait and see situation? Do you have a view on that?
Sure. Maybe I'll touch on the physical first, and then Mike can touch on anything else thereafter. We were very surprised, even going before the crisis kind of went around the world, and it's front page news for everyone. We were looking at the physical market saying, we're coming into March again. This is for those that don't know, in Japan, the fiscal year end for those companies are March 31st. Going back years and years and years, every single March, the uranium price, the spot price, the physical price is sold off because people are cleaning up their books, traders are getting things off, just clearing them off. So we were expecting, maybe some weakness coming into this before this crisis appeared. So for the physical price has had every reason on earth to sell off. You've seen significant liquidity problems across asset classes everywhere in the world. You've seen the Kazakh tenge get hammered because the Russian ruble got hammered, because oil got hammered. You've seen, just talked about the Japanese fiscal year end and traders. So this market has had every reason to sell off. And not only did it not sell off, the market ticked up a little bit before the Cigar Lake news. Then, of course, the Cigar Lake news came just about 36, 48 hours ago, and we've moved up some, 10% or so since then. So very interesting just to watch the dynamics that this market has held up throughout before the Cigar Lake announcement. So we found that to be extraordinarily positive for the market, basically indicating to us that people are not willing to sell this market down and to liquidate stocks at lower prices to get out of these positions quickly.
Jamie, we see some people try and draw a corollary, especially the little gadflies in the nuclear industry.
Yep.
Hey, those financial guys those hedge fund guys are going to unload those physical positions like they did in the last cycle. Well, what they forget is first of all, those very, very few financial players own the physical uranium right now. You could count them on probably one hand. Number two, in that last cycle, they were buying it as it was ripping. The price was going parabolic. And they were holding on to it, right? But they weren't buying down at the bottom. They were buying at near the top. And then when the GFC came, they liquidated. So because the pervasive recency bias in this industry and those who make their living from this industry is orders of magnitude greater than anything I've ever seen, that they go looking for reasons to stay bearish. And so, we've heard there's too much supply. Well, the world just kind of melted down in the last month and the price of physical uranium is up. And people say, oh, well, Cigar Lake closed. Well, yeah, that's what happens. And if you think fuel buyers and traders are not concerned about that, the price wouldn't have done anything. They would have said, we have plenty of supply. And we've maintained, Tim used to be a physical trader, not of uranium, but other commodities. And this is so opaque, it's beyond anything Tim has seen from an opaqueness standpoint. And if there was too much supply out there, you'd be seeing these prices get hammered, we think. And instead, they're going up.
So how are you guys handling this at Sachem Cove? Are you repositioning your portfolio at all? Are you waiting and seeing? Are there any changes to what you're doing, or is it just waiting out the storm?
For us, it's kind of business as usual. We've added a couple of our favorite holdings have been right along for the ride on the way down, and we have some cash around, and we put them to work. And we've not every single day, I would say almost every day though, we've been buying. And I've been doing this a long time. I've seen crises before. This one's different, right? Because most people who are digesting all of this news, you can't process it. We're not scientists. We're not doctors. So there's that unknown, right? And markets hate uncertainty. But at the end of the day, the way we view this is, base load clean carbon power, which nuclear is, we don't think you're going to see much of a demand hiccup, and we feel really comfortable that there's a supply shortage. So for us, if the market hysteria causes people to sell because they're nervous, we understand that. If there's liquidations that are taking place at funds and they have to sell, we step in and buy equities. So we really haven't done anything. As for what you asked me earlier, what individuals should do, Tim and I never talk publicly about what people should do. That's their own thing, their own level of risk reward, their comfort level. I could just say what we're doing.
All right. So, you touched on this earlier, Mike, but uranium has been a very small part of your career. You've been a financial journalist. You've been a professional short seller, and you've been in fund and portfolio management for decades. Talking more generally about what's going on right now, have you seen anything like this in your career? We've had parallels to the crisis in the 80s, to the global financial crisis, to the Great Depression. Do you think any of that does it justice, or is this a unique situation about what's going on in the world right now?
I think it's unique. I think back to the periods of time since I was really in the hedge fund business as an analyst and a portfolio manager going in 95, 6, 7 in that time frame on forward. So I've lived through the Asian financial crisis. I've lived through the internet bubble, the global financial crisis. There's always a crisis every few years, it seems. The difference is, if you go back, the internet bubble, it was goofy. People were making a lot of money, but even though I was newer in my career, those who I was around that were very experienced folks, this doesn't last. And here's why this is going to pop. You get to the global financial crisis, and the feds and the coordinated feds around the world can throw the kitchen sink at it, and they did, to try and get the economy going. The 10-year note in the US at the time was 6%. In August 07, the S&P was around 1,500. It came down to 750-ish. Earnings came down 50-ish%. But but stocks bottomed at around 13, 14 times earnings, and they started moving higher because the kitchen sink worked, right? Here, the greater unknown is what's going to happen from this virus. Now, I know nothing about infectious diseases. I know nothing about anything, but I'm looking at the numbers that are coming in, which for every death and illness is horrible. But at some point you have, from what I understand, this starts to work its way through, and then life comes back to normal a little bit. Now, my concern is for my friends and people around the world and the country who are small business people, right? How do they survive this, right? The people in your hometown and my hometown who are relying upon this. That's a big number, So, what type of, from my view, it's got to be fiscal policy that helps to get these people up and running, and that's something that you don't know what the lingering effects will be on the overall economy from the overall market. So yeah, it's tricky.
Yeah, and I also think it's a unique time as well, just from a financial perspective of just thinking about one of the things I think an immense amount about is the plumbing of the markets, the avenues in which capital move around. 20 years ago, there wasn't this prevalence of ETFs and passive investing strategies. And there's, as well as other things. ETFs are just one example of where everyone's kind of in the same boat. They want to get out at the same time, and there's some of those issues. But even just over the last 10 years, the loss of active management, the loss of people running long short books, pure short sellers who are organic buyers on the way down to get out of their short positions. These types of strategies have not worked for close to 10 years until very, very recently. Whereas in times past, even in 08 or certainly 2000 and years prior, there was probably a little bit more diversity of strategies out there, and how quickly the capital moves around the world, social media, and how quickly information is distributed. I've never seen moves this fast and price things in so quickly, seemingly in minutes rather than maybe literally hours or days or weeks. So that's been certainly a change that we've seen.
Tim, do you think, and I guess I'm asking you to speculate here, but
Sure.
do you think that, the impact of this could have an effect on these ETFs, on passive money, and push capital back into more actively managed funds and that sort of thing?
Yeah, I mean, I think it sure could. I mean, from a big lens of the world, I mean, talking, 30,000 feet, the world has changed. Overnight, the world has changed. And people may push back on that, but it's going to affect all of us in so many different ways that we haven't even thought of yet. And I would not be surprised if we saw some capital move back into active management where people say maybe it's important that people analyze businesses. Maybe it's important that people look at balance sheets and understand the leverage of companies. And maybe we shouldn't have all of our money playing those games alongside everybody else. I mean, could certainly be wrong. Maybe this is a big speed bump and we go back to the way the world was. But I think this will fundamentally change economies, the monetary system. This is going to have long-lasting impacts for a very long time, I suspect.
Well, you guys live in a country, and Canada is no different, where I think it's the average person, something like 80%, couldn't afford like an unexpected $400 bill in a given month, right?
Yeah.
So at a time where they're shutting down basically any sort of blue collar labor job. So in Vancouver here, I know a lot of people who work in the film industry, in the theater industry. Done, gone. Everyone's laid off. Every bartender, every hotel staff, probably most airline staff. So you've got this entire section of the workforce that's sitting at home, can't pay their bills. I mean, Trump started talking about this, I think it was yesterday, which was Tuesday, that the cure is kind of worse than the disease, and that he wants to get the economy up and going again because people are underappreciating, the death toll or the impact that such a reduced economy will have on everyday people. And that's very hard math to do, and I don't know how you do it, but I do think it is like something that needs to be considered. Sorry, Mike?
It's because there are human lives in place, right? You think back to in the 70s, I think it was the exploding Ford Pinto gas tanks. And was there a cost benefit analysis done? Well, do we recall them all and put new tanks in, or what's it going to cost to pay out on a life? And that's awful, right? To think like that. But I'm sure governments and companies do think like that. So yeah, the question is here, when do you get them back? And then, I say to my wife, and I talk to Tim, all day, is it's tricky in terms of the accuracy of the information that you're getting. And I don't think in my career, just as forget career, but as a person consuming information, and again, uranium is a different beast, right? So, but from just a person trying to digest, as a father worrying about my children who are teenagers, how does this affect them from a health standpoint? The information you get is all over the place, and because people don't know. So as I think through this, you start to think about when does it start to peak and when does it start to slow down? And at what point do they say, Tim, were you telling me the other day it was $32 billion per death somebody had tweeted or something like that?
Yeah, I had seen that statistic out there, which is, it's just a brutal statistic to even talk about.
It's a brutal statistic to even talk about, right? And it's horrible because there is no value you can place on a human life.
Yeah.
But at what point does it become, do the health experts think that it's enough in the community where there's antibodies build up and you can maybe go to work? That's way above my pay grade. I try and process it just like everyone else.
Yeah, and there are real implications of economies going down on people's lives, on people's livelihoods, and on death rates. And I think actuaries could probably speak to this. I know every percentage unemployment goes up or the GDP goes down, there are suicides and deaths and all the things associated with that. So it's hard math to do. Mike, we're going to go on now to a private call for our members only, where we're going to talk a little bit more about what Sachem Cove's doing. I know a lot of our members have money either directly or indirectly in your fund, but for our public component of this, is there any parting thoughts that you or Tim want to leave people with that they should be thinking about or considering at this time, or where they can find out more about what you're doing?
I mean, from a macro, the global perspective, I just hope everyone's safe and well. I have no particular insights more than anyone else on where the market goes, or the overall equity markets or the world. So from our uranium perspective, we feel. I don't want to say I guess we do feel like kids in a candy store in terms of where equity prices have gone to versus where the fundamentals are. So that's just our view on that. As in terms of what we do, we're a closed private partnership with that invests across the fuel cycle in both private and public investments. And it ranges from owning properties that have uranium in the ground or owning individual public equities.
Yeah, and just from my perspective, I certainly echo Mike's sentiment, and this will cause me. I was speaking with a friend 2 nights ago that I will need to take some time, and I'm sure a lot of people around the world will have to take some time to reassess risk. As a person in this industry who thinks a lot about downside, thinks a lot about risk, whether it's financial or otherwise in my life, because it just kind of permeates everywhere in my life. Thought I was pretty well prepared for a lot of things, and this is definitely going to be one where we'll need to reevaluate things and reevaluate risk, not just in markets, but everyday life as well. Because again, the world has changed, and we will remember this for a very, very long time.
I think that's 100% right, Tim. And I think we're going to be seeing not only investors do that, but people that have never invested in their lives, and every government around the world is going to be changing the way they prepare for something like this, and potentially, hopefully, other unforeseen but highly potential events. So, gents, thank you very much for taking the time out of your day. Obviously, stay safe, and we'll talk to you again soon.
Thanks, Jamie.
Thanks, Jamie.
See you.
All right. Cheers, guys.
Cheers.